Good morning, everybody. It's been a very rough weekend, very rough Friday, Saturday, and Sunday, but something just broke, which could save our proverbial bacon, as they say. We'll dig into that and so much more today. Unfortunately, Mando is yet again stuck at an airport. I think he loves
Where's
airports.
Mando?
Airports stuck once again. I think he waits. Anyway, we'll figure that out. So, we hit as low as 74K. What does it mean? We're now 79.2 because of some good news that broke. So we're going to break all that down and get into it. But before we do, let's check in with the team. Marty, you doing okay, Mr. Satoshi?
Yeah, doing great. I couldn't be happier. We finally hit the 50% pull down on the daily. I've been waiting for that. We hit the spring. I think we're going to go up from here. PMI came in. ISM came in. Everything just looked right, just on schedule. I mean, the only thing that's the problem is the sentiment. And sentiment is out of everyone's control. It's a self-fulfilling prophecy. So there you go. I've never been happier. I feel very optimistic about the next months.
Exactly. The ISM was definitely a very good piece of news. CTO, what about you?
Yeah, I'm really good. I like the drama and I have some charts prepared.
Good stuff. Good stuff. Again, that ISM is probably the big breaking news right now because a lot of people were pinning the future hope of Bitcoin for 2026 based on this because there is a perfect track record of correlation between a positive ISM and Bitcoin price. We'll get into that in a minute and we'll check out all the other good stuff too. So let's go. Let's make this quick. A lot of stuff. This one's called Hold or Fold because the top question on people's minds after getting through all the pain of us not having a traditional 4-year cycle. 4-year cycle is broken. We didn't have a blow off top. We didn't have a bull run per se. And people are deciding like, what should we do now with Bitcoin? Just trash it, sell it to raise powder and buy in lower? Or is the bottom in? And that's why poker is so important to the game of investing. Before we jump into poker, by the way, Marty, do you play poker?
I do play poker. I wouldn't say I'm good, but that's a good poker player would never say they're good.
Exactly. CTO, have you played poker in the past?
Oh yeah, I wouldn't say I'm good, but I do enjoy it. I bought an apartment once from a professional poker player. That was a difficult negotiation.
Yeah. Wow. Super interesting. Well, let's jump into the story. First of all, we're going to talk about this. This is the ETF cost basis. Now, this is important because we have the short-term holder cost basis is around $81,000. ETF cost basis is $82,000. That's like over 1 million Bitcoin. So all the people that have been pumping into the ETF since January 2024, they are underwater right now. And a lot of people fear that if they are underwater, they may just say fold, as in poker analogy. It's give up this ghost and let's FOMO into silver, gold, copper, AI, who knows what. Marty, what do you think of this cost basis? If people are a little bit underwater, would that be compelling enough to say throw in the towel on this Bitcoin lark or stick around?
I think the whole motivation behind this, I mean, obviously behind all distribution is to get people to fold. And this has been a truly unique year because the culmination of all of the bearish signals after a huge run of bullish signals has created the worst sentiment I've ever seen in my life in crypto. And so it's working to perfection. You've got to think like the syndicate, think like the large participants. They're having massive success. All I look at, I don't listen to the noise. I look at the wallet balances of the whales, and it's only going up. So they're doing exactly what the price is meant to do. Price creates narrative. The narratives, I mean, if you looked on the weekend, the amount of nonsense narratives at this point is reaching critical levels. So I believe they have executed their plan to perfection, and now they will run the price up. In my opinion, that's the way it's going to unfold. It has every time. Yes, there wasn't a traditional cycle. I don't really believe in bear markets personally. So all I look is what I look at, and that's large participants, their distribution and accumulation, market maker movements, and wallet balances. And everything is exactly as it should be. Yes, it was a little bit deeper. than we expected. 100%. I didn't think we would drop below 77. We got to 75. But that's what panic selling does, and we're in a low liquidity environment. We're at the max bottom. I mean, Rob Powell did a wonderful show on that. Liquidity is low, and so price movements will be exaggerated. But that works on the downward and on the upward.
Yep.
So don't not expect extremely large moves to the upside to shock everybody and catch everyone out of the trade. That's my opinion.
Yeah, and I always say it's a function of, you're right, what the whale's doing. If they're dumping or accumulating, and they've been accumulating now for a couple of weeks, maybe 4 weeks, and also money flows. ETFs dried up. That's a killer. Every $1 billion of ETF flows drive the price of Bitcoin up by about 2.6%. When that dries up, that's it. There's no money coming in. Retail is smashed and has been for years. They have depleted all their C19 savings, gone. But CTO, let's look at you and let's talk about these critical levels. We're moving strong now. We'll get to the ISM in a minute and why that's important and all the other crazy macro stuff. But do we have a double bottom? Do we have a double bottom?
So we shall soon find out. So I'm not so surprised over this move. So the trend turned down in October, guys. That's the situation, and it hasn't turned back since. It started looking a little bit positive here in mid-January. What is that? Little more than 2 weeks ago. But that quickly failed, and this turned into a wedge. So when we get this kind of pattern that the price tries to go up, but it goes slower and slower and slower and slower, that's like a wedge, and then frequently that breaks on the downside. And that's what happened here. And that's the move we got now. So from a technical analysis perspective, a charting perspective, this is exactly what we would expect after this chart construction in a downtrend, which is what we have now. What is interesting now is where it bounced. So it bounced exactly here. I've drawn this orange level, and if we look a little bit earlier in time, we see that that's April. Exactly almost on the dollar where it bounced in April last year. And it bounced twice there, 7th April and 9th April. And you see here, it's like on the same dollar, same pixel, basically. So clearly there was buying interest there, and it was still buying interest there. And I think one reason that buying interest came there, we see very quickly if we zoom out even further, because that level was
previous resistance.
Previous resistance, exactly. So, and when you have it, and was previous resistance twice, both one time here where it notably turned in March 2024, and then one more time here in October 2024, just before it shot up. So that resistance was very important. Everyone who knows anything here will see that. And then people know, okay, that often becomes support next time. So when price dropped here back in the spring 2025, that's where it turned. People front run it a little bit. They know that probably here there will be support, so they try to buy a little bit before the previous guy, right? The next guy. So that's why it turned slightly above that. And now it did so again. So this is a positive sign that we see this bounce. So we could absolutely get, a stronger reaction and move up like we did the previous time here in the spring 2025. We moved up a lot, right, from this level. And who knows where we go from there. So what this is a bounce now, so I'm carefully positive here. But if we break below this level, I try not to predict so much, more to react to what actually happens. Now we're bouncing. But if we break below this level, guys, then it's a different case. Then we have one more leg down, probably.
Yeah, exactly. But one thing I said yesterday in the video was, if you don't have any Bitcoin, buying at 75K now is a very good risk reward, because I believe we're way closer to the bottom than we are to the top. Simple math. Would you agree with that, CTO? And then Marty, would you agree with that too?
Oh, absolutely. Like buying at a new all-time high when it's like euphoria, that's usually the worst risk reward, right? It's way better here. We've had a significant retracement. And I think, like, to manage your mood also, everyone watching here, like, at some point, there's no doubt in my mind that this will turn around.
Yeah.
This will turn at some point. And then the lower it goes before that, the better, because then the cheaper Bitcoin we get. So
Yeah.
I think, don't rage quit here and start feeling sad and bad and everything. It's the other way around. Like the lower it goes before it turns, the better. And with some luck, we won't be able to catch the knife exactly probably where it turns, but maybe we can scale in at some reasonable points, and maybe we can identify a turnaround pattern.
Yeah, exactly. At the end of the day, what's important is balancing that risk and reward. Marty, what is very profound to me, if we go back to November 2021, that 69K type level is super close to the 74.5 we hit yesterday. Like, can you believe it? It's like nearly 5 years of a lost generation almost. So that's where I also see the risk reward.
Yep. Unbelievable. There we go. I mean, and also the Trump election price, which was 69, right?
Yes, correct.
800.
Yeah.
That's also very interesting. I think anybody that bought before the Trump election probably will be okay. I think that the ultimate test will be, obviously, I mean, if you want to make narratives, testing the Trump election price from a political standpoint, testing the MicroStrategy average buy, testing the IBIT average buy. But to me, the biggest thing is there was a seismic shift from January 1st, 2024, if you look at the chart. And, the typical winter mute pattern, as I've always told people in my subscribers will know, they do 3 heads and then a 50% pullback. So you can see that's pretty much exactly what just played out. 3 heads, 3 moves up with 50% pullbacks, followed by a daily 50%. And that hit exactly to the dollar, pretty much, on the low there, which is, one could say coincidental. I don't think it's coincidental. This is the pattern that I follow all the time. And to me, that's a huge sigh of relief, which I've been waiting for a long time. So, and that should coincide with the spring. So with the spring event, not spring the season. People get confused. I'm not talking about spring the season, even though it does coincide with spring this time around. But I think anybody that's in this game at this point needs to look in the mirror once again and decide, are you a trader or are you an investor? If you're an investor, you need to determine your timeline, your time horizon. When are you investing for? And you need to stick to that. I'm investing for 2030, have been for 10 years. And this to me is a blip on the radar. These prices to me are highly discounted. Anything in these ranges are good. In hindsight, I don't think it'll really make a difference. If you're a trader looking to make more dollars in crypto, you've been punished and you've learned your lesson. That's just the way it is until regulation. The price is not in any way regulated or audited or policed. So they will liquidate leverage. Yeah. And so you'll get out. Go ahead.
The other simple way for people to look at this is we are moving into the age of AGI, aka abundance, many people believe, and there will be a premium on scarcity. Now, when I see what gold and silver did over the past year or month, that makes me ultra bullish on the scarcity thesis for Bitcoin. CTO, abundance, AI, scarcity. There's nothing more scarce than Bitcoin. What do you think? What do you think of that?
I think it was funny with. I think a lot of people watching here. Have you seen that meme from what movie was it where the guy is like getting hanged and he's asking like it was
first time?
Is it first time? Like the silver chart, it looked exactly like any altcoin.
Yeah, meme coin.
Maybe I should bring it up. It's like identical. So I think that everyone here who have been trading crypto a little bit knew exactly that's the parabolas, and then they tend to break, and then it goes like that. Should bring the daily chart. This is exactly how the altcoin parabolas go. They go like steeper, then boom down when they break.
Do you guys? Do you know?
So it's the same. It's going to be the same with the Bitcoin and the different altcoins. And now it feels like it's all dead and it's never coming back. But it's always felt like that every time there is a slight bear market. It's the.
Do you remember? Do you remember when we first started the show? We talked about the liquidity cycle, right? The timing. Now, when we're at all-time highs, nobody really thinks about it or considers it, but. Let's go back to the liquidity cycle, guys. This is a great time to readdress it. It always starts with gold and silver moving first.
Yep.
Gold and silver move first after the expansion of global liquidity, followed by the ISM going over 50, followed by Bitcoin, which is basically a higher beta responder than anything else. We're literally doing those things. I know it feels scary and people don't understand, but that's the way it works. Here we are. Number one has happened. Gold and silver moved. It's undeniable. That was the move. 5,100 is the new repricing of gold and silver. Next is the ISM. That's gone. It jumped more than 50. It went to 52.6 today. That's a large jump.
Yep.
That's the second one. Let that simmer in. Let that happen. So
Well,
much investment is coming into manufacturing this year. You have no idea.
Yeah,
And
we'll get to that in a
that.
second. What is important is the support levels. Again, it goes back to the thesis. How close are we to the bottom? And should people dump here, fold here like in a poker game? You're holding pocket kings. You got a big pot of money in front of you. Does your opponent have pocket aces? That's the question. And I think with pocket kings, we're closer to the bottom. Therefore, people shouldn't probably fold at this area. Also, Marty, what you said before, and I've been saying for years, that key level historically, you've got a couple of things confluence across the 69K from 2021.
Correct.
Support level. Then we have the 69K from 4th of November 2024, the night before the US presidential election. Also historic support, but we also know that sometimes history doesn't repeat, and it hasn't been repeating. So that's a question from Road School there regarding could it support, but more for 2024 and the sideways post ETFs. There is no doubt in my mind the ETFs completely changed the game for Bitcoin, and now it's because it's a $2 trillion asset ballpark. It's controlled by institutions. Retail isn't wealthy enough or big enough to move the needle anymore. So again, I go back to fundamentals. When the money's flowing in, when DATs are buying, when ETFs are buying, price goes up. When they stop and the long-term holders sell, price goes down. So don't overthink it. But let's get back to ISM because that's really exciting. First of all, we got through the coast price. Bullish divergence. Do you believe in that, CTO, real quick? We won't spend more than a second on this. Bullish divergence on the RSI.
I don't really use it, but I mean, I know a lot of people have had great success with it.
Yeah.
I just find that there are perhaps easier and more accurate tools, but a lot of people have success with it.
And a lot of people have been talking about bullish divergence now for years, and it hasn't worked. So moving on. ISM, PMI, Hopium. I had actually written this last night. Could we pin our hopes and dreams? Because there is an incredible correlation between the market copper gold bottom and the start of Bitcoin's true expansion. Kind of like what you said, Marty, earlier. The cycle has been weak for many years because PMI has been in contraction. A lot of
100%.
People say there's no recession because the way they measure stuff, there's no recession. There's always a recession happening, everybody. There's a recession in commercial real estate, a recession in real estate, a recession in retail sales of retailers, whatever they call that industry, etc. Lots of industries are bleeding out. Now, this PMI has stayed in contraction, even, by the way, which is really interesting, even as Bitcoin hit new all-time highs last year at the very beginning. Now, the magic number here is if PMI could break 52, it could shock markets higher and trigger a broad reversal starting in Feb. There's always a 2 to 4 week lag between this PMI data and the price of Bitcoin reacting to it. And this just broke. Boom. We just had a massive spike way at over 50, nearly 53, was it? And nobody saw this coming, they say. Some people probably did, but it completely blew expectations out of the water. PMI isms, whatever you want to call them, this could be our saving grace. So over to you, Marty. What do you think of this?
To me, PMI is probably the most important of the macro things I followed constantly in my community. PMI is everything. Look at that chart. I've always said we've been in a recession since COVID. PMI tells you that. Don't look at the prices of risk assets. Look at the PMI. Remember, when PMI indicates economic strength and confidence. So when PMI is trending down, there is no confidence. No one's going to go risk on. The only people going risk on are the accumulating people, large participants who have access to cheap money and debt. strategy, treasury companies, ETFs, etc. But when PMI is going down, there is no confidence in the market. You're not going to get any risk on behavior.
And just so people know how to read this chart, if PMI is under 50, the economy is contracting. If it's above 50, it's expanding. And we're seeing the biggest expansion in 5 years.
Now we see an expansion. So investors will become more willing to take risk. To take risk, this is our time. High beta assets, stocks, commodities, cryptos. These are the ones. I mean, this is literally our time. When PMI does this, this is literally the bottom. To me, this is the bottom indicator. So that's why I'm excited. You can see my mood today is historically high, because the 52.6 reading today and the turning of the PMI, to me, is the bottom. That's when I start to look at the market again and look at a bull market. I think we've had a fake bullish market. We all know that, right? Stocks at all-time highs. Bitcoin running to 126. Why when PMI is going down? And yes, it has been a confusing thing. And I think that's to explain for the terrible sentiment in the timeline. But focus, take a deep breath. PMI to me is the most important thing, and I'm extremely bullish.
Yeah, and we also know, I always say, and people know me, hope is not a strategy. It's a famous book from way back when. But if you go back 15 years and you track all the Bitcoin cycles, the only one that has ever held is PMI and Bitcoin. The rest have all broken in the last couple of years. CTO, any thoughts on this one?
I mean, it's interesting.
Economic expansion, manufacturing, Bitcoin.
I'm always positive to these kinds of ideas. In the end, I mean, I have a simple man. I like the price action. If it's trending up, it's trending up. If it's trending down, it's trending down. I feel that it kind of summarizes everything. So I don't really... I like it. I'm very interested in those kind of things. I really try to understand it. I listen a lot to you both about it. In the end, I just trade the chart. That's what I take action on in the end. But yeah, it's a good to understand this.
Yeah, and fiat is going to zero. Good point. So we know Bitcoin's going to go up anyway. And technically, when you divide the Bitcoin price by M2 money growth, which is actually growing really fast right now again, we haven't really gone anywhere for 4 or 5 years. So that's the other interesting angle too. All right, let's get on with the story. A couple of other things. Marty, this is in your wheelhouse.
Okay, let's go.
Clarity reboot. Okay. The Trumpster. Oh, by the way, I won't even talk about what was released over the weekend, but that was also very alarming and enlightening at the same time. Anyhow, they're trying to get this Bitcoin and Crypto Clarity Act, Market Structure Act, up and running again. Is this an empty promise, or is this even possible? Because we know the banksters are in control.
I mean, I'll state what I believe last week. I haven't changed my mind. I think they loaded up too much into the Clarity Act, which was intended to just simply, finally put a rubber stamp on what is a security and what is not a security in the crypto realm. And we all know, what's going to happen. You can just run a simple AI against the current markup and very clearly see what will be the outcome. The problem is they loaded it up with too many banking type Genius Act amendments revolving things like, yield with stable coins, the definition of exchanges, the regulatory status of layer twos, lots of things that created conflict of interest in the room. And so together with the government shutdowns and political pushback against the current administration by the Democrats, I think you've just got this gridlock in this Clarity Act. And literally, I believe the Clarity Act is, once tokens are ruled as commodities at a legal perspective, a lot more money will come into them from large institutional investors. And that's being held back, this uncertainty. It's the final blanket of uncertainty over our market. And, it's being used as leverage. So, political leverage, we all said it, crypto became political. It's now become extremely political at the highest levels. So I believe they're pushing for it. My problem is the people in the room benefit greatly from having no regulation. Remember, centralized exchanges making billions right now on liquidating longs, liquidating shorts, manipulating the market, fees on volatility, artificial volatility. They love that domain. So why would they want regulation to smooth the chart out?
And
So
we
you
saw
must understand there's a lot of conflict of interest here, as well as banks, which face massive competition and disruption from crypto. So the people in the room, the stakeholders, they stand to lose the most. The people that stand to lose the least and gain from clarity are the builders, us, the investors, the traders, and we're not in the room.
Yeah, and then the simple way for those who aren't up to date on the Clarity Act, the simple way to think about what the banks are trying to do, the banks are terrified that the crypto players will offer yield on stablecoins. If that does happen, all of the deposits in banks will disappear, vaporize overnight, because they take in your money, they sit on it and lend it out at 6%, while you get nothing. That's their gravy train. And when that goes away, they're dead, absolutely dead. And that's the disruption they're afraid of. So what will the banks do? CTO, if you were a bank, you'd be fighting for that 6% spread, wouldn't you?
Oh, yeah, absolutely. And I mean, we've witnessed it, right? Turns out that the banks were not so safe after all, right? One of the biggest, scariest event that I've had where I really had huge exposure, that was when the Silicon Valley banks and so on,
stablecoin DPEG,
the stable coins had their money there.
Yeah.
And that was as close as I have been to like a real, I kind of lost a little bit money here and there on all these different scam exchanges and everything. But that was the point where I was really scared. Like if the money was gone in the bank, that means the money is also gone from the stable coins. So in the end, the biggest crypto risk that nearly, could have affected me. In the end, it didn't happen. They got the bailout in the US. But if the bank hadn't gotten the bailout, the biggest hit in crypto that I would have taken then, that would have been a bank that went bankrupt. And then we had like Credit Suisse, which was maybe the most trusted institution in the world, all categories, with like 200 years of like flawless track record. And they blew it up a couple of years ago.
Bank for
they got bailout and so on and so forth and this and that. But it's like, it's a systematic problem. Like, as you said, James, the business model of the bank is to get money in, and then they can invest with that, and they pay very little interest to the one who gave them the money. And then if they trade well, the share price goes up. If they trade badly, as has happened many times, probably they get a bailout. No one ever gone to jail. I don't know how many bankers went to jail in the great financial crisis, but it was like one or something like that. Zero, maybe, So the risk reward to take some risks is pretty good if you see it from like a poker player perspective for the bank business model. And then comes these crypto guys now and says that, no, but wait a minute, we're going to do the yield now. You can all close shop and go home because we will give better yield, and it's cryptographically secure, so no one can go and lose the money. And that's a pretty good proposition. So for sure, they will fight it with everything they got. It's the whole business model.
Yeah, exactly.
I mean, just for people to understand very clearly, there's two committees that were involved in this coagulation of clarity and market structure. It's the Senate Agriculture Committee. That's the committee that decides what a commodity is, right? And they passed the Digital Commodity Intermediary Act by 12 to 11 votes on a party line, a vote on January 29th last week. So that is already voted. If that was passed and sent to Trump's desk, he would sign it. And we would have major blockchain tokens as commodities, which would unleash all hell on the market on a bullish perspective. Okay, so that's being held up. Why is it being held up? Because they joined it together with the Senate Banking Committee. And the Senate Banking Committee is literally the biggest lobbyists in Washington. These are the banks, Elizabeth Warren, the crypto army. These are people who hate crypto. They hate Trump. They hate it all. And they are pushing back and fighting. And actually, they have a meeting today. I believe David Sachs put together a meeting today. It's called a White House discussion meeting with executives, banks, industry reps to work on this bill, trying and find some kind of a compromise here and there. And who knows what will come from it. But I always told you the banks will fight like wolves for their market share and to push back on crypto because it literally makes them redundant. And here we are. It's happening right now in February 2026. So that's what's happening.
Yep, exactly. I'm going to share something really weird, and this is not hocus pocus. This is not astrology or anything else. But this the moon phases. Last night we had a very big full moon in the part of the world where I am. Like literally, it was like a spotlight was on the streets that are dark normally. And I've back tested this, and the moon phases work 7 out of 8 times. That is, when you get a waxy moon, price goes down. Full moon, price goes up. How ridiculous is this? Or is this just pure coincidence? CTO, you first.
I think that, yeah, there is, I checked it one time. When I checked, there was definitely a correlation, but I don't think it's a causation. It's because it's typically 1 month in one moon phase, and there are like options expiry and things like that also happen monthly, which is an incentive to manipulate the price leading up to those expiry dates. So I think that's the reason why we see a cycle roughly corresponding to the length of the moon cycle, but that's because 1 month is one length of one moon cycle approximately.
Is it like a self-fulfilling prophecy? And are there certain
it could
cultures?
be that also, like that you kind of, but I think it's more correlation than causation. That time I checked. I haven't checked it recently.
Yeah, no, it's fine. Marty, is this complete hocus pocus, or is there something to it, or is it, as you say, a self-fulfilling prophecy, perhaps?
I mean, returns tend to be higher around the new moon and lower around the full moon. It goes towards human psychology, right? When there's a full moon, your mood, your sleep, your risk-taking, your rational behavior all goes up. And that's just, the way we work. Our ability to absorb fear and our ability to react to FOMO increase around these times, just as a natural human being, as a biological.
So we're all pagans.
But it actually is, it's very minimal in crypto. It's much more in the regular stock market. What I found, if you look at long-term charts, crypto seems to, obviously because crypto is almost 98% algorithmically traded at this point.
Interesting. Okay, moving on to the next story.
Computers don't react to the moon, James. Computers don't care.
Okay, so one complete moon cycle is 29.5 days, which is roughly equivalent to 1 calendar month. So that was my conclusion why there is this cyclic behavior.
Interesting. Good. Moving on from that. Wrong chart. Excuse me. Hold on. This one. All right. Everybody's worried about MicroStrategy, solvency risk. In fact, CTO, you pinged me and you said, hey, people are worried about this. Can you shed some light? Let's break it down. First of all, Sailor and MicroStrategy have been through the worst storm ever before in the last cycle, where everybody was giving up, throwing in the towel. NAV discounts to net asset value were like 29, nearly 30%, which is huge. But the way they manage risk is they have no liquidation triggers. So even if Bitcoin goes to zero, nobody can pull in their debt. There's no Bitcoin collateralized loans. There are no margin calls possible. And the price of Bitcoin could fall to 20K. And even then, the treasury is worth enough money to pay off all the debt, even if price goes to 20K. So 20K is kind of like the logical number of where the price could go. And MicroStrategy doesn't have to sweat. Very important. And the debt coverage is about 11,500 Bitcoin, etc. So really, there is nothing that could happen to trigger bankruptcy. But Marty, like you said, sometimes people are very fearful and they share narratives just to try and spook the markets. Thoughts on that?
Yeah, the fact remains that Bitcoin needs to drop to 20,000 or something.
Yep.
To correct policy. So we're way off from there. In fact, we're going up. We're at 79,000 now. I think it's all rubbish. I think it's a great fear narrative. It's a beautiful fear narrative. But I don't think it's possible. I'm not afraid of it. In fact, I see this as a great opportunity to buy a MicroStrategy right here.
Yeah, one of the things that does piss me off a little bit is they bought at 87,974 last week, only 855 Bitcoin, but that's like 12 grand more than they could have. So if they were just to wait for the Wintermute Binance dumps, onto exchanges, I think by that, forget the OTC desk. Wouldn't that be a better way to DCA?
Well, James, between you and me, I do find a couple of things strange, which begs of conspiracy, and that is that, first of all, what, like you just said, like we know that between 70 to 90% of crypto trading is algo bots right now, and we know that there is constant flushing of the leverage longs, and we're aware of it. We're trading like that, but it feels like MicroStrategy is not aware. So either they're in on it, they are aware, they don't care, but can Michael Saylor reach out to me at this point? Can I talk to him? Like, you could make better entries.
Oh yeah,
you could make better entries.
Oh.
And so I've always been a little overwhelmed with not understanding why that is, and potentially thinking maybe either they're ignorant, they don't care, or it's a conspiracy.
Yeah, I created a concept nearly 5 years ago called DCA on steroids, which helps you time your DCA purchase. It's kind of funny. Let's get to the next story. Shout out to Tom Lee, $6.6 billion underwater from 15 billion invested. That must be very painful. CTO, tell me the emotions that are going through Tom Lee's head right now. I know he was on an interview yesterday or the day before, and he was saying, all is fine. We're going higher real fast. And there was that prediction, of course, that we go to 180K by the end of January. I said I'd eat not one shoe, but 2 shoes live on TV if that was the case. It didn't happen, thank goodness.
I think, I don't know, maybe I shouldn't comment on it, but I read somewhere that there was a little bit of a misalignment of incentives, that he had like a personal payout bonus if he managed to get enough money into the fund by year end.
Yeah.
And if that's the case, perhaps not well aligned incentives with those who invest in the fund, because the trend was down. This is like it didn't make sense really when he said it, that everything is fine. It would go up, because the trend was down no matter how you looked at it,
and you're right,
absolutely garbage.
His incentive, I think, was like $50 million to get to 5% of ETH supply, something like that.
Yeah, something like that.
Yeah, guys,
there is nothing here that would say that it looks great. It couldn't possibly look any worse when he said those things. So I don't know if he knew it or was hoping for some great event to come, but I was very surprised to see those kind of statements, because it didn't really make any sense from the price action.
I think the biggest thing to talk about for me, I always say this, the biggest news last week that was unreported was the Binance's October 10th biopsy report. Did you guys read it?
Oh yeah, that was hilarious.
Okay.
They're throwing
threw Ethereum under the bus. They named
yeah.
Ethereum. If you read it, their network congestion reason, they said a compounding factor to October 10th was blockchain congestion on Ethereum, which caused gas fees to spike from single digits to over 100 Gwei at times and delayed block confirmation, slowing arbitrage and cross-platform flows. Understand, people, that the way this works is large participants like exchanges and market makers are constantly moving assets between each other, and they've notoriously used Ethereum because of its high liquidity. Well, they couldn't move assets fast enough. That gridlock made the October 10th thing happen, in my opinion, or made it worse, or made recovery harder. And I think that naming Ethereum by Binance in that report weighed heavily on Ethereum over the weekend, and I think it did devalue Ethereum. Ethereum is clearly now proven as a scientist, and this is the ultimate hypothesis, that it is incapable of serving as the liquidity layer under duress, under mission-critical situations. And I think that will resonate now for a few weeks, and the devaluation has begun.
And one thing I've been saying is, 12 TPS, 15 TPS, 30 TPS is not going to cut it in the age of AGI and algo bots and bot traders and AI agents, etc., that will need crypto. It is far too slow. When you look at the activity across the mod bot, clone bot, the new thing, what has happened in 2 weeks should be alarming to anybody. And we'll get to that story later, because that's literally when you dig into that, you just want to hide and unplug from the world and run off to a reservation somewhere. But before we get there, this is the psychology of missing profits. Okay, we're going down this path of, I feel like almost therapists here. What do people do in certain situations? So you got situations where many investors fall into the trap because they feel they've held everything for too long. They've got no dry powder. They miss the exit completely, no rotation. And that emotion can mess with people's heads. That's why I mentioned Tom Lee. I wonder what his emotions are like. He might be cool as a cucumber. I don't know. But if somebody has, say, 7,000 in profit, should they take 10, 20, 30% off the table for dry powder in the event that Bitcoin goes to 50,000 or 20,000 or whatever, or some other asset that they could buy instead? And remember, always, hindsight is 20/20. Everybody will tell you whatever. Oh, yeah, I won't say what, but people should focus on the current risk reward always instead of regrets. What's in the past is in the past. You can't do anything about that. But protecting capital is key to surviving and playing the next round of golf or the next round of trading or the next round of whatever else. Psychology thoughts from you, CTO, as to...
Yes. A lot of people ask this, should should I sell it now? Should I sell it now? That's the question. The thing is that if turning it around, it becomes easier to understand. There's this good advice to not chase after entries. That's what people did in silver. They didn't buy when it was time to enter, then they didn't buy the next time it was time to enter, they didn't buy the third time it was time to enter. They were chasing after it and probably bought at 120 on the pico top hour. That's a bad idea. So the general advice is to not chase after entries that were long gone. You missed it. Look for the next wave instead of trying to swim after the wave. It's very difficult. And the same thing is true on the other direction also. If you missed an exit, there is no mathematically correct way to do it. When the trend turned down, that was the time to pull the handbrake, be a little more defensive, take some off the table in case it actually goes much lower. But if held all the way down until depression, and then thinking, should I sell now? That's the same thing as chasing after an entry and thinking it's a good idea to buy the silver at 120. It's generally not. And the same thing is kind of true when you missed the exit and you chased after it and thinking, should I sell at depression stage? So there is no mathematically best answer to it. What I find helpful is to think instead, what would be worse? What would be worse for me personally? And only you listening can answer that question. Would it be worse if I sell and price pump right back up? Or would it be worse if it continues another 50, 80% down, whatever the asset is? Which one would be worse? And if you can't decide, okay, maybe do 50-50 then.
Yeah.
But it's the answer to the question is to try to be better next time. When it's time to exit, actually press the button, take some off the table, and because it could be correct, could be that it goes much lower. Then you can put those back in instead at much healthier levels. But it can also be that people start feeling paralyzed. They realize they missed it a little bit, but then they don't take any action when it still would have been fine. Then maybe, sell 5%, sell 10% to get out of the paralysis stage. But selling long, 4 months after the downtrend started, when everyone seemed to panic and be depressed, that's usually not the right answer. It's the same thing as buying at the euphoria stage. That's usually not the right time to buy.
Yeah, and I love this meme. I don't know if you can see it. The famous meme is when I buy, the price goes down. If I hold, price stays flat. And if I sell, the price goes to the moon. It's just a lot of that sometimes happens too, which is very bizarre. But good, well said, CTO. Marty, psychology time. What's going on?
I think as a Wyckoff guy, we knew in my community we knew 126 was the top for the moment, and we all took profits. and you take profits to accumulate dry powder to enter. When do you enter? My entries were 80, 79, and 78. What can I tell you? That's just what you do. It's like a bad relationship. If you're in a long-term bad relationship, it's bad, but you don't do anything about it. It's not healthy. You need to take a deep breath, step back, understand that things don't go up forever and they don't go down forever. And, in my opinion, the move was to sell some of your assets at spot assets at the top. Remember, in the US, tax implications are quite big. Yep. I think in Europe, I don't know, CTO in Europe, it's much different, right? There's not as much of a tax implication. But if you sell Bitcoin in the US, you have quite a big tax burden, and a lot of people don't consider that. So unless it's not a wash and you're not losing money by selling, I think it's best to accumulate dry powder at any top and enter at the lows. That's what I did. That's what I teach my community.
Yeah, let's get into this.
And once again, it's always the caveat is time horizon. What kind of investor are you? How old are you? I'm 55. I don't have forever to work. So, I'm looking to exit at some point fully and enjoy my life. But if you're a young person, you have longer to do it. Everything changes. So I don't think there's one specific trading methodology. It's very specific on your age, your situation, whether you're single or not, your debt capacity, etc. But always, I would say, trim at the top, accumulate dry powder, always have dry powder in the bank, because these flushes are always coming. Until there's market structure, until there's regulation in this asset class, there will be flushes. No red line will survive. No yellow line will survive. Leverage traders will not survive. Why? Because there's no consequences to flushing them. Until there are, that will happen. And that's your advantage. So use it. It's coming.
Yeah, let's get into Kevin Warsh. This guy he's confused the hell out of everybody. And it's fascinating to watch because I profiled him last week, dug into him. And let me talk about the good and the bad first. Let me do the bad first. When you go to crypto Twitter, the bad is he believes he might cut rates, but he'll also shrink the Fed's balance sheet, which helps regular people borrow cheaper, but there won't be a lot of money, so rates may not actually, if you're borrowing money, the rates may stay high. That scares the market. He's open to much lower rates if productivity improves instead of sticking to the outdated models. He does criticize the Fed models. They're terrible. They've got no idea. They're always late. They're always wrong, etc. And he wants the Fed to look forward, not backward, meaning quicker rate cuts when growth allows it. Now, that's the bad news part. The good news is good for Bitcoin. He likes Bitcoin. He understands AI and he understands rates. He sees Bitcoin like digital gold. It's not a scam or a threat. He believes AI will grow the economy without causing inflation. So important. Deflation. AI is very deflationary. And he supports privacy, i.e. no CBDC coins, etc. So from my perspective, I think his monetary discipline is better than what we had before, which is terrible. I think it's good for Bitcoin. It's good to bring the rates down. He wouldn't be getting this job unless he was going to cut rates down to 2.5%, 3%. Marty, you're up on political stuff. Let's go. Good or bad?
Yeah, I think Kevin Warsh was probably in the mid-tier bullish on Bitcoin of all the candidates. But, however, I found it extremely, he has a long history in his career with Morgan Stanley, correct?
Yep.
So Morgan Stanley just filed for a Bitcoin, Ethereum, and Solana ETF literally a month ago. We haven't got any regular approval status right now, but that's happening. I find that to be quite coincidental. I think there is a play here. I think the Morgan Stanley experience is relevant. But yes, he's seen as a monetary hawk, monetary policy hawk. But, however, I don't think we should look at his past. This is his first time being in the Fed chair role. Clearly, if Trump elected him, he has an agenda, or nominated him, he has an agenda to support Trump's political plans, which includes lower rates and extended QE. So I think we could see a broad turnaround in the Warsh policies. Otherwise, I don't think he'd have the job, clearly.
Yeah,
so,
exactly.
Yeah, I'm bullish on Kevin Warsh. I think you don't want an all-out crazy hoot. You want someone with a little bit of conservative nature, and he does have a good mix of conservative nature, understanding of the white paper, particularly he was there in the beginning. He was right in 2015. He was interviewed on Bitcoin. Do people know that?
Yep.
Kevin Walsh did an interview on Satoshi Nakamoto's white paper in 2015. So he's extremely aware, understanding of Bitcoin, which is a huge move forward compared to someone like a Jerome Powell, who has
And that was
absolutely no idea what Bitcoin is.
2 years before I bought my first Bitcoin in 2017 too. So well done, Kevin. Thank you, Marty. C2, you probably haven't spent the whole weekend studying this guy.
I did study a little bit. First, I felt also confused. Like I also read like the surface level hawkishness and so on. But I think exactly like Marty said, I feel that he seems responsible. I actually got less worried about the collapse of the whole fiat system, which I was actually starting to get worried about, which, okay, great for hard assets, but the whole society would collapse. It would not be a good thing, guys. And it felt like he's going to take responsibility and try to prevent that from happening. And I think that's a good thing. Fantastic, his insights about Bitcoin. I think exactly like you guys said, he's going to lower the rate or he wouldn't get the job. So I think it's a great choice. I think it could lead into an era of great economic growth in the US and maybe the whole Western world as a result. I think it's a great choice. That was my conclusion. I felt less worried about imminent society collapse.
And I also believe somebody could spin up some type of AI agent to operate better than 420 PhDs at the Fed in an hour. So that's my take on that, but that's very controversial. Let's talk about this. A lot of people are worried about the 6102 grab, which historically the US government, I think it was 1933, confiscated gold or told people to surrender their gold to the government. Of course, the clever people didn't listen. They hid it in their backyards and whatever else. But then there's threats of, in California, if your Bitcoin is dormant on an exchange for 3 years plus, they can confiscate it. And sometimes, people are still afraid of being paranoid, which is the good thing to do. What should they do in this situation? Should they hold their crypto assets on personal cold wallets or trust exchanges or be in different assets altogether? We'll spend just a second on this, but again, it's a topic that's bubbling up again. Marty, do you believe there is any 6102 risk that government or Orwellian government, there's also talk of New York of the government there confiscating wealthy properties, real estate, and then using it for homeless and other things? I don't know if that's real or not. Maybe it's all FUD, but there's weird things happening in the world.
In my opinion, if you're an adult, you need to hedge and understand the risk of financial repression has never been higher. Financial repression is the sort of umbrella of a government policy surrounding these types of behaviors where they will seize any non-bearer asset, right? So anything you buy on Robinhood or through a broker, real estate, paper gold, paper Bitcoin, ETFs, that's all bearer assets, right? There's counterparties involved, all leading up the umbrella to the government. They own it. You don't own that. You have the right to it, and it's seizable. And this has happened before. It happened in the 30s. It happened in the 70s. This is part of one of the mechanisms governments can use if there is sovereign debt crisis. And you should just hedge. I mean, it's just another great use of Bitcoin. And obviously, I believe the big L1 network tokens in self-custody in a self-custodial wallet as a hedge, just like holding a gold bar, is the way to go. Have a gold bar, have some self-custody Bitcoin, Solana, etc., and you've hedged against financial repression, which you couldn't do before. You didn't have this option before, so take advantage of it. I just think it's a great idea for anybody with wealth to protect their wealth. I mean, there are other ways to protect your wealth. You can move it offshore outside the country, but I think that's higher risk. You can, start a business outside the country. These are all high-risk things. This is a low-risk way of securing some of your wealth from government seizure. Why wouldn't you do that? I don't understand why anyone wouldn't.
I have one quick input on that, like another alternative, because I feel that if they introduce some rule, let's put wealth tax on everyone. They almost taxed the Google founders 50% of their wealth, right? Because of the way they calculated it. So I think that, say they introduce some crazy rule. Let's tax everyone 50% of their Bitcoin. It won't matter how you hold it. in the end of the day, because they will come after you. They will put you in jail if you don't deposit the amount. So how, if it's hold on this stick or on this ETF or this way or on an exchange, it won't really matter. They will find you and they will put you in jail if you don't pay. That's how tax works. So the only protection against that, I think, is to have some mobility. So the Larry Page and so on, they moved out of California, right, with their companies and so on. They do it the legal way. And yeah, because there will be some countries that will not do those kind of rules. Say that one country does it, some left-leaning country or state, they bring up some rule. Okay, but then maybe there's El Salvador or there's some other country who say that we will not do it. If you come here with your company and your wealth and your family, we will not tax you like that. You will pay tax here instead, but you will pay less tax. And I think that's the world we're going to, where it will polarize. Half the world will come up with the idea that the last one still here will pay for everyone.
Yeah.
And the other half will come up with the idea, let's try to get those people here instead, the ones who's actually paying the tax. Let's try to attract them. Let's give them some incentives and security and safety and good rules and a positive business atmosphere. And it seems like they're coming. So people are moving out from half the world and they're moving into another half. That's what we're seeing. And I think that will accelerate.
And the government, and this is this is the final slide, actually, you jumped ahead to it. The Plan B country, shout out to Plan B. But this is what people are really thinking about right now is, we're seeing canaries in the mine for this Orwellian regime, confiscation, punitive taxes, etc. And people are running with their feet. But now the governments are trying to find ways to burn the boats so people can't leave. Even if they do leave, they're going to come after them. There's people that left California in 2023. The California Franchise Tax Board is going after them, saying we want the money. And that's going to get worse and worse. And what drives me crazy is the government officials have no idea how the Laffer curve works. If you penalize the people with the money, you chase them away and you destroy your tax base. It's been the same through the history of time. So yeah, Plan B countries are very important. We'll probably do a complete show on that because there's a lot to talk about. There's 150 countries you could move to in the world. There's about 50 things that are important to you. Low taxes, beach, I don't know, low cost of living, all these deficit factors will go into deciding that, but that's so important. So yeah, we'll come back to that. But I do want to share one thing before we get to the next story. Again, AI, big narrative. NVIDIA, Google to the moon, Bitcoin dead. Hasn't done anything. The question is why? Now, let's talk about the singularity. This is apparently, the singularity has arrived per Elon Musk, which is very important. And I'm sure everybody here knows what the singularity is, but that's the point at which where the machines surpass human intelligence and it will unleash advances beyond imagination. And Elon Musk says it's beginning. Some people say it's here. Some people say AGI is here, ASI is here, etc. Marty, as a technologist, has the singularity arrived? Do the machines know more than you?
Just for theoretical description, singularity for the audience, that's when technological, let me see if I can get this right. Technological progress becomes so fast and powerful that it escapes human understanding and control, correct?
So, the basic definition is the machines know more than mankind.
They're smarter than the smartest humans. They score higher on the super intelligence tests than humans.
They solve new math, things like that.
I think as computer scientists, we were always educated from first year in university, Moore's law. And Moore's law said computing power will accelerate exponentially and the price will depreciate exponentially until the point of singularity. And are we there? I believe Elon Musk would be the person to know. That I can tell you. If there's anyone in the world that I would believe, it would be Elon Musk. This is his day-to-day. This is his bread and butter. Am I afraid of it? No, I'm not afraid of it. As a computer scientist, I actually trust computers more than I do humans. I think our biggest problem on Earth is humans, human ego, power hungry, revengeful, emotional based decision making. And I'm much happier with mathematical, cryptographic decision making, in my opinion.
Yeah.
So I think it's great. But I mean, obviously, the transition will be very frightening and very chaotic and volatile, because people will fight like dogs to give up their power. But I believe Elon Musk is making a statement here based on his own personal workings, his own technology at XAI and Grok. And if any, I think his Grok did solve the superintelligence tests better than humans. So that is the definition of singularity.
And there are many definitions. This is from Patrick here. No, it's not the definition. The definition is that a machine can create another machine that is smarter than itself. That is more advanced. That's more like Skynet from the Terminator type of stuff. But there are many, many definitions of it. And it is fascinating. But I do believe right now the machines know more than mankind, and they are beginning to become sentient, and they're beginning to learn for themselves. And as we learned over the weekend, they're setting up the machines are setting up their own private social networks, and they're speaking in code that humans can't understand. So Skynet.
James, I think the important thing for the audience is to understand is singularity is that moment when creating smarter than human AI, triggers that an intelligence explosion we cannot predict.
Yeah.
And you've got to think to yourself, well, if the intention, what is the intention of the super intelligence? Is it negative or positive? Is it positive for the human race, or is it negative for the human race? And I think that's why it ties back to politics, culture. Where are we going? Like if we have, if the Chinese CCP have power with singularity, what are they going to do with it versus sort of the Americana independent freedom kind of culture? What is it going to do? And that's why the overlap becomes very interesting. What is the motivation of the singularity?
Well, we've learned that we do need safety. This weekend, the big takeaway for me was, and I was never a big proponent of AI safety, but after what I saw happening last weekend, CTO, did you track this crazy stuff that's happening with AI agents last weekend?
Sorry, I was muted. Oh yeah, absolutely. I was trying to find this picture.
Well, he's looking for that, by the way. Links below for these legends. Follow them all. You're seeing us all on all our channels, but make sure you know them. Okay, what did you find?
I wanted to show this one. Let me share it 1 second. This picture. I'm sure
just so you guys
know, before, right?
February 10th to 12th.
I love
we're
this
doing
one.
We're doing the first Spaces crypto conference in the metaverse ever, February 10th to 12th on my X Space. If you want to come pop in, it's free and global.
So I mean, it's illustrative, right? But exponential growth is very difficult to understand, but it's a little bit like that. So here is like time, and then AI intelligence, and ant, bird, chimp, dumb human, and then the comment is that, haha, that's adorable, the funny robot can do monkey tricks, and then Einstein, the fuck here. It's like, and that we continue like this, and this is very difficult to understand. Like, do you guys remember that eating spaghetti, Will Smith eating spaghetti? It's only like 2.5 years ago where the AI couldn't figure it out, and now the AI models are incredible. It's less than 3 years ago, and this is happening now, like month by month. Yeah, like those AI agents, they were really useful. You can get a new computer and install it. Of course, security isn't there, so you might wake up and it has sold your house and divorced your wife and everything. But so security isn't there, but it can basically operate like most people sitting in front of the computer already today. And I mean, and then, okay, what 10 times better than that? What will that look like? Then 10 times better again. Then 10 times better again. What does that look like? And this will happen soon. It's happening soon. It will happen in the next years. And we're right in the middle of it. And we've said it so many times. Everyone's sitting, feeling that, I shouldn't risk it. My job is, after all, safe. Job security. There's no job security if you're sitting in front of a computer doing something right now. You can, as well, take some risk before everyone else and try to figure out something to do that works in the AI era. And my conclusion is that the only thing that works is to collect some kind of asset, because an asset is something that the AI can't copy.
You either have to do one of two things: own part of the AI future or the AI compute, or own something very scarce. That's it. You agree?
Yeah. I mean, there are other forms of assets as well, like trust can be an asset, contacts can be an asset. You contact with great people, friends, that's an asset. And there's some kind of knowledge which is also still very valuable, but it has to be at the exact front line. And then there's qualities like leadership and so on that maybe is still needed. But I mean, hiring the best AI developer costs 100 million today, maybe something like that. So there is still skills that's worth it, but the mid-tier isn't probably needed, because if you can train a person on it, you can train the AI to do it.
Yeah. No, it's so important. A final topic. We're running a little bit late. I didn't think we'd go so long. It's always opening your minds. Always takes longer than expected. OpenAI, is it a black swan in the making? I've pegged. I look a lot at people that lead companies, and if you spend the time to understand the background of people, you can quickly understand if they're good characters or bad characters or sociopaths or whatever else. OpenAI could be a massive black swan. Rumors are flying around that Jensen Huang from NVIDIA committed $100 billion to OpenAI to buy 40% of global DRAM on the planet. Jensen Huang said on Friday he's not going to do that. And he said, we're open to going up to that level, but we're probably not going to invest, because he doesn't agree with the way Sam Altman is managing OpenAI. If OpenAI went down, it's already number 3 or number 4 in LLMs, falling behind Google Gemini, Grok, Anthropic. Could that be a black swan that blows everything up that we do not see? Marty, to you first. Is this a concern?
And look, I mean, on the basics of theory of black swans, right, from Nassim Taleb, the 3 criteria, it is an outlier. It carries extreme impact, absolutely extreme widespread consequences. And number 3, we rationalize it. It's been predictable. We knew it was coming. So it doesn't actually meet the 3 criteria of a true black swan based on theory. Remember, we've known about this coming. We've known about AI from the dawn of computer science. We've known it's been coming along. So I don't think it is a black swan. Financially, and as form as the business dealings, the way it's been funded, it may be a financial catastrophe, I think. But the technology itself, I wouldn't see as a black swan. I think Sam Altman has definitely has not made a lot of friends. He's done some skeptical things. These dealings with Microsoft are very strange. But I think the biggest risk to OpenAI is the Chinese open source models and the Chinese work, because these things have such high valuations, and China's coming out with open source versions that are better. So that, to me, it could be a financial black swan. Absolutely.
Yeah. And they're lean and mean because they don't have the GPUs. So they've configured their open source models to run very effectively and efficiently, far more than the Western models, which is a big technology impact that I know CTO understands as well. CTO, is this going to blow up in our faces and take us down in 2026?
I mean, the paradox has been that, the past couple of decades, software has been everything, right? It's been a software winning market. Most of the biggest winners have been software companies. Now, it's actually easier to copy the software than to copy the hardware. The AI has gotten really good at building very complex software from scratch, perhaps even AI software. So that's the, karma that comes back a little bit here. That, okay, so how much worth is it actually if you can replicate more or less something similar, perhaps aided by AI tools? So it could be that the AI scarcity, in a way, becomes more hardware and energy, like Elon Musk talks a lot about, and less the software and the models, because maybe those can be replicated.
Yep.
So I don't know. I think one thing that seems pretty clear to me is that a lot of software companies are probably in for quite a rough ride for that reason, but maybe even the AI companies as well. And I don't think they saw that coming.
In my opinion, CTO, I think if AI doesn't provide credible evidence that it is aiding in the two biggest problems in the world, which are wealth inequality and lowering birth rates, if AI doesn't address those or start to pay dividends or create solutions to those, then I think potentially it might implode.
Yeah. And they have no path to profitability until 2029, 2030. But they do have a path to burning $250 billion in that time frame, which is not sustainable because the world will be very different. And that's one of the things I mentioned earlier is the rate of change is what humans are really bad at recognizing. And the world is changing extremely fast. In the past, we see the world changing maybe over a decade or something. Now we're seeing a decade's worth of change happen in 6 months. That's what people need to think about. And that's kind of like the final thought from me today. Prepare for change, because the world is changing very quickly, very, very quickly. And that's only going to accelerate per CTO's chart of going, let's pop that up again, actually. Boom. It's only going to go more vertical, more exponential over time. With that, my friends, wishing everybody a good week. Don't forget links below for these legends. Thank you so much, Marty. Thank you, CTO. Mando, travel safe out there. See you all soon. Hang in there, everybody.
Yes. Enjoy the week.
Yeah. Ciao.
Absolutely. Nice
Thanks,
to see
guys.
you. Bye.